Hey, good morning and welcome to Driving Markets. So first of all, everything said on this piece, whether it's YouTube or Instagram or Twitter, it's only an opinion. And yesterday my opinion was, or 2 days ago, actually on Tuesday, that there was an outside chance that the Fed may raise interest rates by 75 basis points. It was really very outside chance. And then as the day went by, and especially on Wednesday, all of a sudden CME Group, which is a Wall Street watch group, said that they're going to increase it by 75 basis points, which effectively means that the Fed leaked the information out that they wanted to prepare Wall Street for 75 basis points, a 0.75% increase in interest rates. Now, just because I pass an opinion does not mean my opinion is right, does not mean I'm going to get it wrong. It's an opinion. So when I say that the markets, in my opinion, are going to go up, that's my opinion. The markets are going to go up. And when I say my opinion, the markets are going to go down based on some supporting evidence, or supporting evidence going up either way, then that's my opinion based on knowledge, experience, feel, technicalities, fundamentals, input from other individuals who helped me out. Thank you very much, Phil in Barcelona. I know I love your opinions, but I've got to mention you because you're constantly texting me all day with market opinion. So when I get it wrong, for example, yesterday when the news came out on the 75 basis points, the market went up. Then it came down. I said, you know what? I reckon the market's going to end up in negative territory last night, but it didn't. I got it wrong. There was a lot of powder in the actual barrel, and that pushed the markets up, and also overnight markets are up also. So, but however, I will stick to my guns and I'll say the overall trend is down. We can get more specific on that within the actual broadcast itself to give you some background as to why I think that is the case. So take into account that when I'm passing comments, they are an opinion. And what's good about financial markets, or good about any particular political move or social move, when there's two-way discussion, that is healthy. And therefore, when clients or when viewers or anyone puts up, say, "May I don't agree with you," I don't get angry. I'm absolutely fine with that. I'm okay with it, simply because there is always a two-way view and a two-way opinion. So let's get into the nitty-gritty. So the Fed raised interest rates by 75 basis points and the dollar fell. Why would the dollar fall if interest rates had gone up? The dollar fell because it is a risk aversion, it's a safe haven. So what happens is when the markets began to go up and they liked exactly what the Fed had done, and they said, you know what, the Fed is now going to deal aggressively, in their words, with the inflation issue, with the whole economic issue, the markets like that. So the equities and risk assets went up, and the safe havens went down, which was the 10-year Treasury and the US dollar. So however, that doesn't break the trend. The trend of the dollar is up, but the markets like the fact that the Fed brought out a 75 basis point increase, and the statement stated that they are aggressively going to tackle inflation. And the equity markets like that because it showed that there is an action plan, where up until now there hasn't been. However, the Fed, in my opinion, is still well behind the curve. When I stated back in January, February, March that interest rates this year in the States will be 3.5% to 4.5%, I was told that is a load of trash. It won't happen. They might go up by 0.5%. Now that has been realigned and say, yep, you know what, rates could be 3.5%. Well, I'm saying rates are going to be 4.5% because we still are not tackling inflation. Interest rates is only part of the way of tackling inflation. We still have to get the supply chain lined up. Okay, so the dollar was weaker. The Bitcoin dropped all the way down to just above the 20,000 level. So I called it right over the last few weeks. It's going to go down to 20,000. The question is, has that 20,000 level at Bitcoin now brought up the 2017 bull support? So that's when the bulls really took off in 2017, when it hit 20,000. And is this going to be sufficient support now for Bitcoin to burst through and go back up to the higher levels? In my opinion, not. I think it's going to break down below the 20,000 level and go all the way down to around about the 13 to 15,000 level in the next month or so. That's my opinion. I think the fear factor will come back into the market, so the market will sell off again. So it may be a good opportunity to sell into the rise. That's my opinion regarding financial markets and indices. Let's look at Tesla. I've been calling Tesla down to 550. No, because I don't like it. I think Tesla's a great company. As another Phil said to me, who was an IT guy, he said that it's not really a car maker, it's more of a technology company. It's advanced for society, to improve society, to make things better. I love Elon Musk. I think he's probably the best CEO around, and therefore I'm a big fan. But on technicalities, I think Tesla has some way to go down with the rest of the Amazon, the Nasdaq, and the high growth stocks, purely to bring it back in line with some realistic PE, which is price earnings ratio, because it's a bit out there at the moment. It has come down from its intraday peak of 1492 that back in November last year, and it's come all the way down to around about the $700 levels. It's dropped about 50%. I do see more downside on the high-tech stocks. I think we're in for a very, very rough ride. I think inflation is here to stay, that's for sure. So what trading are we looking to do? So those bulls and those people who are itching to get back in on the financials or any type of shares, and the fear of missing out, that FOMO attitude, well, go for it. If you really think that you're going to miss out and you can't bear the thought that the markets are going to move without you being involved, get involved. However, put in a lot of money to ride out the storm, because if you don't, you're just going to get a lot of losses, and you're going to be then contacting me or your broker, depressed, upset that you bought too early or invested too early in any types of shares. So if you have that FOMO, the fear of missing out, get involved and get on and trading. Those people who are trading and have good money on the account who want to trade small amounts, and you can trade your FX in your Bitcoins, your Forex in your Bitcoins, and the high growth stocks, because they are volatile and they are allowing you to make intraday or swing money over a period of time. You can follow me on Instagram. Please note it's Instagram, May Valensky Driving Markets, if you want to follow me there. I also do Twitter, and we've got LinkedIn, YouTube. You can subscribe and hopefully make you a few quid. All right. Interest rates out today in the Bank of England. Just for the record, I'm expecting a 50 basis point increase in the Bank of England rates today in the UK. All right, for the record, so anyone who's listening, they can challenge me on that after the Bank of England comes out with its interest rate decision. Have a good day.